Multinational consulting firm KPMG recently launched its Africa-wide digital channel scorecard report during a virtual conference. The Digital Channel Scorecard unveils in-depth insights into the state of user experience on retail banks' digital channels. Reports based on a review and benchmark of a number of user journeys clustered into 5 journey groups across 4 digital banking channels: mobile banking, internet banking, USSD, and chat banking. Joining us to discuss further, Boye Ademola, who's a partner and head of digital transformation at KPMG. Good morning, sir. Thank you so much for joining us. So just to get into it, can you walk us through those 5 thematic areas of your digital scorecard?
All right, thank you, Rotus. The first journey is digital onboarding, and that speaks to the ability for banks to onboard customers without having them go to the branch or have any in-person interaction. Very closely following that is payments and transfers, which is the ability to make payments and do transfers across any channel at any time for customers. The third is digital lending, and this particularly is focused on retail and SME lending. And again, it speaks to the ability of banks to lend to retail and SME segments, particularly without them having to have any physical interaction or to go to the branch. Self-service is the ability of banks to empower customers to do what they would to have had to go to the branch to do on the channels, like requesting for their debit cards, turning their debit cards on and off, and the likes. And the last one is customer care, which is what happens when there's failure and when there's a problem or when a customer needs to engage, and that's customer care.
Thank you so much. I have to say self-service is my favorite out of those 5. Can you describe the bank categories for us?
All right, so we looked at 26 banks across Africa, and these banks have big footprints in Africa. These are the leading banks in Africa. Some of them are in 20 plus countries, some are in over 30 countries. There are 4 categories that we speak to in the report. The first category are the leaders, and for us, the leaders are those who we see are end-to-end digitally. Deploying technologies to help with document upload on digital channels. They're deploying optical character recognition technologies to help read data and help customers through the journey. They are also deploying analytics also on those channels. We also see the leaders also using APIs. They are beginning to publish APIs. So the whole concept of open APIs, being able to produce data that they are able to interchange with Fintechs or other FIs, financial institutions. These are the leaders. They're quite strong when you look at lending. They're quite strong when you look at customer care, and they're able to offer all this digitally. The challengers are the next segments, who we call the banks that perform quite well. Particularly, they're also able to onboard end-to-end the customers without having them, go to the branch. However, when it comes to execution, particularly around self-service, around customer care, looking at the quality of the user journeys, the experience is not at the level of the leaders for the challengers. The last 2 categories are the followers and the late starters. The key issues with the followers and late starters is that they have often disjointed processes. Sometimes the processes break. Sometimes they require users to go to the branch.
Great stuff. Thank you so much for taking us through that. Now, there's a
at the end, their cost is not at the level of the user.
Thank you so much for that, Boye. There's a chart here on user adoption. Can you the change in overall channel adoption? Excuse me. How does this impact banks' operational strategy? We're seeing internet banking up 24% there. This is 2020 versus 2019. Mobile, anyway, these are the 4 categories where we're seeing the main changes in channel adoption. Look at branches, that's fallen. How does this impact operational strategy for banks?
I think what you see from the message from that chart and from the survey that we did last year is essentially that the adoption from a customer perspective is much stronger on the channels. In fact, you see that there's a decline of transactions at the branches, and the uptake on the channels is in double digits. So ultimately, what it means in simple terms for banks is there is need to be a lot more intentional about, the investments and initiatives on the digital channels. That's where they need to focus, and that's where the strengthening needs to happen.
Great stuff. Your report says fintechs are a threat to traditional banks. Why is that?
If you look at the state of financial inclusion in Africa today, from the statistics we have across the continent, the formerly banks in Africa are hovering around 40% of the bankable population. And that tells you that there's a significant number of people that are either unbanked or they are underbanked. And that's a significant opportunity. All right. So whether it's a bank or fintechs that are able to harness this opportunity, that certainly will be the game changer, because when you have a majority of the population not catered for, then that opportunity is too significant. Now, in particular, the fintechs are attacking this opportunity. The fintechs are going after the underbanked and the unbanked. And what we see is that the fintechs have models that can scale better than our traditional banking models. Obviously, banks are not going to build double the number of branches that they have on the continent to cope with this opportunity or to respond to it. So, but if you look at the fintechs, they are digital first, and therefore their model is able to scale. And that's why you're seeing some of the valuations and the investments into fintechs that we're seeing on the continent. It's really about that business model is able to scale. It's also more cost effective. So from a bank perspective, the fintechs are a threat, but also they also are an opportunity. And we're seeing banks doing a lot more around partnerships and collaborations. And that is one of the way forward for banks, we think, on the continent.
Excellent. So if I was to ask you what you make of the bank's ability to adjust to the fintech threats, is that ability there?
I think I would say that we see two categories of banks. If you go back to our report, we have the leaders and the challengers. Our sense is that for the leaders and the challengers, their ability to respond to this is quite strong. And we're seeing them, thinking and operating like fintechs. And that's why they're able to deliver the sort of services that we're seeing on the digital channels. However, when you look at the followers and the late starters, those that are still struggling with the whole concept of user experience, with journeys that are intuitive, that are simple and easy to understand, those are the ones that we think will really have a significant challenge coping with the threat by the fintechs.
And thank you for that. Your report made a point about bank notifications being limited to transaction alerts. Can notifications essentially be expanded beyond their scope?
Certainly, notifications can be expanded. I think we've just gotten used to the fact that notifications come when you do a transaction. But if you look at the tech giants, the concept of notification is largely for engagement. It's not just about informing the customer, is about engaging the customer, is about creating a sense of assurance for the customers that as they go through that journey, there is a monitoring that is going on behind the scenes. So for instance, areas that banks can look into notifications immediately will be digital onboarding. When you have long, lengthy and convoluted processes like digital onboarding, where you have to upload different documents and so on and so forth. Or another journey will be digital lending, where you have to provide information that then gives you a credit score and so on and so forth. Notifications can be introduced to improve that process, to keep the customers engaged, to keep the customers aware, and to show that indeed they are, it allows the customers to understand where they are on the journey, and ultimately give comfort that they are on course, to enjoying the product and the service they want to do with the banks.
Great stuff. Okay, Boye, this is my favorite part here. The report also made a point about improving self-service. How important is that? Please tell us.
I think self-service is really important. you can't we can't overstate the importance of self-service. And why is this? First of all, I've said the branch model cannot scale. All right. So there is no point sending more customers to the branch. Branches are more expensive than the channels. All right. So that's the first point. The second is around empowering the customers. Customers want to do banking on the go. The digital natives, they live on social media platforms. They live online and they want to do their banking on the go. They want to do it online. All right. So moving that's the self-service philosophy, moving these activities that bring people to the branches, all right, back, or onto the digital channels, and to do it in an intuitive way, in a simple way that is not convoluted or confusing to customers, is really important. And that's the heart of the self-service agenda.
Great stuff. Now, the flip side of self-service is, I guess, customer care. You carried out a survey in 2020, found out only 23% of bank customers are confident of their bank resolving various issues comprehensively. Can that number be improved by your next survey?
Yes, I think that is an area where the customers are also telling us. If you look at the survey that you showed earlier, where more customers are actually going to contact centers, customers are also telling banks that they need to improve their customer care capabilities. They need to improve contact centers. And a few of the things that banks that are in the leadership tier are already doing, and banks need to pay more attention to, will be around the use of technologies, chatbots, virtual assistants, able to respond any time of the day, able to do so at scale. So regardless of the peak points, being able to do this at scale is really important. So that's ability for banks to respond and do so on time is quite a significant experience issue for customers. And banks will do well to pay attention and leverage technologies to do this much better.
Excellent stuff. And so we can expect these reports on an annual basis from KPMG, or how often are we going to be seeing them?
We're planning to do it every 2 years. And we'll continue to share it and share the findings with stakeholders and with the general public.
Great stuff. Boye Ademola, partner and head of digital transformation at KPMG. Thank you so much for sitting down with us and taking us through this in-depth report. Very helpful there. Digital scorecard for Africa banks. Thank you so much.